All right, hello everyone. It's Tim Davis coming to you guys with my weekend market review. Today is now Sunday, April 9th, 2023. Time is now about 1 a.m., about 1 a.m. Eastern Standard Time. And what I'm going to do this weekend is something just a little bit different because I wanted to see what price action is in all the major indices as it relates to its 50-day and 200-day moving average. I'm going to look at the daily and the weekly charts and just examine and analyze what's happening as it relates to our 50-day and 200-day moving average. The 50-day and 200-day moving average are the two major moving averages that a lot of analysts and folks use to determine the overall direction and some support resistance level of the longer term trend. And when you see changes in the 50-day and 200-day moving average, that's something that you really want to pay close attention to. Those are the two main ones that most folks look at when they're looking for a longer term duration of a change. Now, with that said, this is a daily chart of the SPXA 200R. And this is the tool that tracks the overall sentiment of the market. And I like to pay close attention to this because normally what this tool is showing you is the participation in the markets, especially the S&P, and how many stocks are participating in whichever direction the market is going. The higher the number, the more bullish stocks would normally be. Now, this has been breaking down for quite a while now. This purple line, folks, is going to represent my 50-day simple moving average line, and the red line is going to represent my 200-day simple moving average line. And again, especially major these major moving averages, 50-day and a 200-day. Again, price action does not like to be so far away from moving averages, so they tend to gravitate back towards the the moving averages. And normally they gravitate back to the to the smaller ones first, the 50 and then the 200. So you'll see on the left side of my screen back in October where price action was able to rally back above both major moving averages, both above the 50-day and the 200-day. And got up to around about November, and look what happens. Price action comes right back down to the 50-day moving average. And look how it uses the 50-day as a strong area of support. Look at this area here. Just hugging that 50-day moving average for quite a bit, almost about a month before price action decides to bounce off of it. Then revert back to it again, bounce off of it, then get around about January of 2023, and then price comes right back down to that moving average, 50-day moving average, and then it hovers around here for a bit, drops below it, comes back up to it, and now look what it's doing. Over here, it was using the 50-day as an area of support. Now over here, it's using it as an area of resistance because we got right back to it. Could not really sustain a good rally above it and came right back down. Where to the 200-day moving average. Now, what is the 200-day moving average doing down here? It's acting as a level of support. So the bulls are, they're in a tight situation because everywhere they go, they are trying to find a reason to, to hold on to major levels and push price back up. And now they are testing the 200-day moving average. Started this test back in March of this year. And look what's happening, right back up to resistance, the 50-day, using it as an area of resistance, and look like it's ready to come back down to possibly test this 200-day. So I still believe the bears are definitely in control of this market. What the bulls will need to see is these moving averages start to react to price differently. In other words, they need to start to see these moving averages, these major ones, start to curl up instead of staying flat, or turn it down. Right now, they just stand flat. And as you can see, the gap between the 200-day and the 50-day is getting smaller and smaller and smaller, leading me to believe that eventually the 50-day is trying to cross below the 200-day and that is definitely a bearish signal. Now this tool has is up, it's got as high as 75% back in February. Since then, it has not been able to get back to that level. Here in March, beginning of March, got as high as 61. Here towards the end of March, we have gotten as high as 58, and looks like we're starting to struggle here. So the overall momentum is still shifting in favor of the bulls. So again, the sentiment is still, sentiment overall sentiment is shifting in favor of the bears, and unless the bulls find a way to get this percentage much higher, right now it's just hovering around 53%. Only 53% of stocks are participating or maintaining a move above the 200-day moving average. So that means there's more stocks below the 50-day moving average, below the 200-day moving average than it is above the 50-day. Actually, that sounds backwards. So you get the picture. Price action is just hovering. I mean, these percentages just hovering around 50, and being muted or being stopped by these moving averages. So it looks like it's ready to trend lower. So with this about to trend lower, look at the weekly charts and look at the weekly chart already showing a dire situation. The weekly chart is battling to get above its 200-day. And let me go straight to the S&P 500 so you can see how the S&P is looking just like starting to struggle just like this the tool that tracks the companies trading above the 200-day moving average. Here's the S&P. One thing I will point out here right off the get-go, this is a weekly chart. Look at the gap that we had between the 200-day moving average and the look at the gap that was formed when price action was well above the 50-day and the 200-day. You can look at the gap and then look at the gap being closed, which leads me to believe that eventually what looks like wants to happen, looks like this 50-day wants to cross below the 200-day. That would be a straight bearish move, folks. So again, I think the bears are definitely still in control of this market. In order for this to be in favor of the bulls, you don't want to see this 50-day rolling downward on this weekly chart. You don't want to see that. You don't want to see this 50-day rolling down towards this 200-day, because eventually it's like they want to cross. And then look at price action. Price action is being muted in between the two on the weekly and the daily. Look how price action is barely finding a movement above this 50-day. Like it's getting tighter and tighter and tighter in here. And if we see price finally break back below this 200-day, look out below, folks. Look out below. And then if we see price action fail below this 200-day, and then we see the 50-day fail below this 200-day, all bets are off. We're really going to start to see, more pressure from the bears. Look at a quick daily chart. Now let me go back to weekly chart, show you guys something else real quick. So see what the moving average is showing us. Look at the trend. Look at the overall trend on this weekly chart. Even with price action, trying his best to maintain a level above this 200-day, you see how the upward movement or the rallies are getting shorter, and we continue to run into strong levels of resistance along this diagonal trend line. So I wanted to point that out on the weekly chart. All right, now let's switch to the Dow Jones. So as you can see with the Dow Jones, same type of scenario. This is a weekly chart of Dow. So again, you see price action well above both major moving averages from, this is October of 2020. Yeah, October 2020. And we got nice little continuations to the upside, but then all of a sudden we start to break down again. Started to break back below major moving averages right here. It was around November of 2021. And we started to see that 50 simple moving average line getting closer and closer to the 200-day simple SMA. And look at price. Price action is pretty much going nowhere. Made it back above this 200-day and just is bouncing here, bouncing off of it, bouncing off of it. Hit this upward trend line here. And if I was a bet man, I would say we're not going to. I don't think we're going to break out to all-time highs or highs higher than the 2022 high. Then we're going to start to see some major resistance around this level that we're at now. So Dow Jones right around a level of a major level of resistance. If we don't get a huge breakout of this level, we're going to continue to see consolidation and struggle until price action drops lower. So what the bulls want to see is a huge breakout above this level sometime next week. Then again, if it doesn't get that, we're going to start to see some, big moves to the downside. Look at the volume too, it's starting to taper off with this little rally here, back up to the back up the trend. Volume did not tick up, volume ticked down as the rally was going up. So that's also negative divergence and a good sign for the bears. That's the Dow. Let's take a look at the NASDAQ real quick. Here's the weekly chart of the NASDAQ. Again, you see how the 50-period moving average has been moving down for quite a while now, and it's finally crossed below the 200-day moving average. And look what's happening with the NASDAQ, folks. I'm talking about in a tight range. The NASDAQ has really been in this tight range here. Really been in this tight range. Something got to give. Either price action is going to bounce up. We're going to turn and we're going to get a bullish market here, or we're going to fail right where we're at now. And it looks like we're starting to possibly fail. You got the Williams percentage oscillator starting to hinge lower. RSI starting to hinge lower as well with price action. With the 50-day crossing below the 200-day, folks, see that? That's a bearish signal. So it's not much in here to be so excited for the bulls, because they keep running into a strong level of resistance and failing to break out of it. That's the NASDAQ, folks. That is the NASDAQ. Now let's take a look at the Russell 2000. Russell looks similar to the Dow again. The Russell, although it managed to break above its 200-day moving average and the 50-day moving average at one point, price action did, but it did not. The moving averages did not react to that movement. They continued lower. Look at that, 50-day continued lower, and eventually, boom, price action dropped back below it, and now it's using this area now as that was support is now resistance. Look where we at now. That's now resistance. So, in order for Russell to be able to turn in favor of the bulls, they need to see a major breakout. I mean, a big breakout back up to around 2,000 and beyond, in order for the bulls to take back the driver's seat. But right now, bears are still in control of this driver's seat, folks. So that's where we're at now, right around that 1750 level, 1800. Between the 1750 1800 is a huge amount of resistance there. So next week's going to be very interesting. Let's glance at the VIX real quick. Here's our VIX. one thing I've been pointing out with the VIX is that since around the beginning of 2022, let's say the beginning of 2022. Since the beginning of 2022, the VIX has been settling in this area here, and every time we have came back to that to the area to touch it or drop below it or just around it, we've gotten a bounce. Touched it here or got close, got a bounce. Touched it here, got close, got a little bounce, back up to the moving average. Touched it here, got a little bounce. Touched it here, got a bounce. We're touching it again, folks. Again, we are still stuck around that range. And you know, what the VIX has been showing us for the past year is that every time we've hit that range, we find a way to get some kind of bounce. Now, the trick is, well, not even, you're not going to tell it, but the key is for the VIX is, what kind of a bounce do we get? Do we get a major bounce? Or do we get a muted bounce? Some of these bounces weren't that big, like this one back here. Wasn't that big before we came right back down. Then this was a pretty substantial one. I'm thinking that we're getting very, very close to a substantial break higher in the VIX. So look out for that. We're approaching the summer months. I think the summer months are going to be, it's going to be a bit, the markets are going to probably really struggle throughout the summer. So we got to see what happens. All right, folks. So that is my spiel on the major indexes. Hopefully this is something you guys can use, and I will catch you guys next week.